Right. Hey traders. So I want to take a look at what's going on today, and I think it's an interesting day. So if you have questions and stuff, this video I actually stuck the link to the Discord right down. I'm pointing down because I assume you guys see thing. A few people were asking about that, so it's in there now. Or you could just shoot a message over on YouTube. I know it's like a public message and anyone can rewatch your comment, but I assure you most people don't care. So come on into the Discord, ask questions, because feedback is going to be the best way you're going to understand. Okay, so let's take a look at what's going on today. I think we have some interesting events. The first one I want to point out is an indicator that I haven't really talked a whole lot about because it hasn't given us much, well, in these live streams that I've been doing the last couple of days. It's this one right here, portfolio orders. It popped up this morning. You see that? So what this is trying to model is orders across the whole New York Stock Exchange. And the objective here is to answer a few questions, just because I know this can be a confusing one. It's looking for a trader who's operating an account that does a couple things. The first one is you got to be market wide. So that's the first thing requirement. And the second one is your volume, or the trading activity, needs to appear to care about the close. So the idea is that these orders, or the volume, is responding to the way that momentum numbers and other things appear to be going to, like they appear like they're going to close at the end of the day. So your mentality is basically, you're saying, I'm saying I want people who appear to have the mentality of looking into the future at how markets are going to close, and also you're big enough that you're filling market wide. There's a couple of types of ways that this volume shows up. First let me talk about how it plots really quickly. So when price moves, this is being plotted essentially with the data less price, like that. The data is scaled, so there's like a scalar K attached onto there. So what's happening is price is moving down and it's plotting above price. And basically what you want to see is them start to converge. And when you see this convergence happening, what's happening is this is interpreted as slowing. The filling is slowing down, and it tends to have bullish implications. And so that's how it's plotted. It's actually overpriced. This isn't overlaid like the velocity indicator here. It's actually, so sometimes you'll see it fill for long periods of time, which tends to happen in big bearish moves. When things move down, it tends to be that these orders will fill as prices decline, and then they stop as prices rise. So then we'll also see the buying into little smaller orders throughout trends. That's a common thing to see. You see price kind of dip down, and those orders will pick up, as you probably saw as I was scrolling back. A couple of times, I mean, if you want to scroll through the Twitter feed, maybe later if I remember to do it, I'll post a longer term shot, but typically you'll see these smaller piles show up in trends, and that's a normal thing. That tends to be the stronger the trend, the less you see portfolio orders filling. So today, we saw some small orders fill right after the open, and we had a small gap up. And remember yesterday, this was like the social justice move of the markets, which I think that's continuing today. And even better, take a look at what's going on with tension. So we got a little bit of filling today in the morning from portfolios, so market-wide blanket orders that just fill. And then look at tensions burning off. So this is a burn-off day. And without looking at any of the activity, which we'll get to, the data points or the events in the market, you can tell that tension is burning or getting close to zero. And the reason I call it a burn-off, I mean, you can think of that a lot of ways. From my perspective, it's because tension was getting too high. There was too much, and they're just burning through it, just killing it off. And you can see that the velocity numbers have been down, sort of countered with decay here, because decay was positive, and the velocity and the velocity numbers being so strongly down are really what is helping burn through this tension. So we're getting through these numbers. And notice that the daily number has not come down at all. So the bulls this morning, any little dips had no impact on daily tension. It stayed strong. Our velocity, or our tension number, the possibility space of the market is easing up, so we can continue to rise. I was speculating that a gap and go might keep tension higher, right? Like I was thinking that tension would rise through gap and go. But this is like best case scenario. We have the market doing a gap and go, eating through any bearish traders who have decided to be rebellious, and tension is burning off. Just think about what that means. It means that price is now a lot higher and tension is lower. So continuing to push up. Where's the ceiling? And typically I'll look for ceilings or places where the market must deal with the counterforce tension with how high tension gets. And look at this, we got tension getting moving to zero. Now, I want to point out just structurally, we haven't looked at any data points, any liquidity, any decay retests, but structurally, I want to point something out. One of the big features of tension is a concept of motivation. I write it because I want you to take the time to think about it. The whole thing that makes any analysis successful is not to predict that some Markov chain, some flow of events that lead to an inevitable outcome. It sort of is, but it's not, because these chains that you're typically looking for is like event A, B, C equals this. And it's something that can be so readily defined that you could almost program it into a computer and you get automated trading strategies out of it. And that's just not it's not that it's not possible. It's just not the path I want to take with this type of thinking. This type of thinking is an attempt to get you engaged in the market, to feel like an active, real member. Okay, so just think about the term motivation for a second. Look at tension. One of the motivating features for the counterparty, and in this instance, because everything's positive, right? You see that they're both up. I want to make this really clear. The counterparty are the bears. Not because the bears are the counterpart, it's because the position of possibility space, they're the ones who are playing the counterparty part. So what motivates the bears? Well, in this instance, in this situation where they're the counterparty, what they want is to get tension to, which is one event, and through zero, which is another event. As you watch this play out over and over and over and over and over, you'll learn that getting tension down to zero is one big fat activity that's hard to accomplish. But getting it through zero is an entire another one. It's ousting the controlling party. Bulls are in control. If tension gets to zero, there's a really good chance they're going to say, we don't lose control of possibility space. And we saw this just a couple days ago. It's a pretty common thing. They didn't want to lose control of daily tension right here. You see that? And they didn't want to lose control of it there. And they didn't want to lose control of it here. And so what happens is getting it down to zero is a whole ordeal. Getting it through zero is another event. Don't put these two together. Don't think that getting to and through are the same thing. Because once you get to zero, then we have to switch gears and say, what's it going to take to get that controlling party to move out of the way and let this run? And if we look back a little bit, back on Friday, you could see 30-minute got to zero, and there was a knee jerk here by the bulls. They were like, no. And they were able to get tension through, but they didn't get daily tension, which was happening at the right time. Now, had they got that through, they could have really done some damage, but the controlling party wasn't ready to get out. So what motivates the bears here is the concept of getting tension to zero. So you need to keep that in mind, because when you say, let's make that a motivation, you cast that out and you say, okay, put that in cast it into the near future. You say, how do we get from here to there? You can start understanding maybe what options they have. So the bears here are saying, well, we want to get tension to zero. We still are at 20%, you could see. Negative 20% counterforce, but it's slowly making its way. And you can see with the projection, it's not really looking like the market's going to be hitting zero today. Now, if bears came in with some very aggressive data, it would have to be aggressive. then what they could do is probably get this down to zero. The reason that I'm modeling this, and it may sound a little like, I don't want to say that this is what's going to happen. We're starting on one end of the spectrum. We're going to go with bears and what's motivating them, and we're going to work our way up the spectrum to the bulls, what's motivating them, and paint the pictures in between so we get this full motivation spectrum for both sides, and then look at the events and see who is actually getting what they want, who's not, and it should become pretty clear what's going on. Okay, so we're starting with the bears, and the bears here, you could see if they were able to hit the market with something just devastating and execute a ton of orders, there's a possibility they could get the 30-minute down to zero. Now, if you're sitting here saying, well, we've seen that kind of stuff before where the bears come in and flex. Well, that was a sort of a different situation where they were trying to cash average a loser and the bulls were doing nothing. I think this is a different situation than that. But let's take a look here where this is important. I want to point this out. I'm comparing it to this because I'm trying to contrast these two events. Right here where tension it gets down, it's near zero. They're able to get tension down. I'm not sure how they did it or what was going on, but they were able to get it down. And the reason they got motivated, the reason the bears, if you remember, the bears were hitting the market here, was they saw the light at the end of the tunnel because they were so close to it. It was like daily tension. We could just get it a little further. It could be very motivating, just a little further. And it wasn't able to work. But the reason they got so pumped was just because they could see it in the near future, because the number was small. Well, take a look at this. If you're a bear and let's say you have some dollar value associated with how much it would cost to just push this down, and then some dollar value associated with pushing daily tension down, this is still would be very expensive to make that happen. You would have to manipulate a broad basket of stocks, a lot of them, if not all of them, and you'd have to get them to all move in tandem together. And you could just sort of imagine that and how much it's going to cost you. And it's not that the bulls wouldn't let them do it. We've seen that. The bulls will step back and say, go for it. And this, why would the bulls step back and let them go for it? Let me give you a philosophy that I think is really important. You have not stress tested your system. If the thing stressing your system has zero power to actually gain control or win, it's not really competition if you don't let them, the other side, do everything they could do. The bulls will not get in the way. We let the bears do everything 3 times. We let them do it back on Thursday. We let them do it here Tuesday. We let them do it here. And the point is that when you let the counterparty genuinely have the power to do all that they can do, and then they fail, that means you handed them a gun, they put it to your head, it was loaded, all they had to do was pull the trigger. If they fail to defeat you then, you win. So the bulls would absolutely let the bears do everything they can do because it's been proven that they're terrible. So I don't think it's an effective mentality to say, oh, well, the bears can do it, therefore they're going to win. That's not what's going on here. The problem here is that the bears know they can't. They were handed the control of the market a bunch of times, and they failed. So what the bears need now is not active competition. It's active defense, more like sabotage. What the bears need to see is to see the bulls screw up and then augment that failure, right? People do this all the time. They're like, you did so good, man. Trying to get you to be overconfident. It's like this natural human tendency that's really irritating. When somebody does well, it's like you want to overcompliment them to get them to be overconfident and fail, which makes you look better. It's really irritating. Now, there's genuine compliments. I'm not saying that. But there's this mentality that people have in competition that's like you blow up their head, so they have this big head and they mess up. So in this market, the question is, can the bears sabotage the bulls? Or have we seen the bulls fail in some way that would allow these bears to take advantage of this. Now, I think that this is still too far away for the bears to just say, oh my gosh, I can't help it, my mouth is watering. But 20 is, or negative 19 now is not that bad. I mean, they could get that closer to zero. And the reason you'd want to do that is simple. Okay, let's just think about this for a second. The idea is just rationality. If we get tension close to zero and then the bulls fail, it's easier to get tension over zero. So there's this constant mentality through all of this here where the bears are like, we would love to see tension closer to zero, because if the bulls happen to fail, then we have a better shot at getting tension down to zero under that light that the bulls have moved out of the way or they're not doing well. And because they'll get this short window where they can maybe gain control of the market. And gaining control of the market would mean tension goes down on both the daily and the 30-minute time frame. So you can see how this is very competitive. And right now, it's the bears are just sitting back going, we lost, we failed, okay, we're done. Did the bulls fail? Where are they? Because really that's your only option at this point. Because if the bulls come in and pick up and consume liquidity, then the bears are going to have to sit back and watch that be effective. I don't know why they would fight it. They've lost a lot of money trying to make this whole thing bearish, and it wasn't working. So we're sitting here going, I see why they're motivated. I see what they're looking at. I also see the wall that's in front of them, this big wall that they would have to overcome, which is the fact that the mental block, first of all, and also the bulls are in charge. We got that up. So we're modeling this bearish mentality. Now what we want to do is look at the bullish mentality. What do the bulls want in this situation? Well, really what the bulls want, the best thing you can have is to have somebody else pay for the movement, right? You don't want to pay for this whole thing. You don't want to sit and inject capital all the way up. That's silly. That's a horrible way to be an investor. You want to buy in at the lows and watch everybody else scramble and hop to it because of your money, and just watch them work until you got all the money. That's what you want. So we have bulls who have popped in here, here and here and here, and I think there was some here. So they've got this big. That's where they injected their capital. Right now, it's like, I don't really want to inject more capital. I'd really like to see the market do the work. That's where the bulls are at. And so is there anything they could get that would make them happy? Yes. They would love to see the bears try, because that means you get somebody coming in on the counterparty who's eager. And I say eager all the time. It's eager because we haven't seen the bulls fail. They're not out of the way. So if the bears, let's say the bears just got liquidity right here. Let's say right there. Let's say that this right here was bearish liquidity and they come in and hit this down. It's like, what are bulls going to do? Bulls are going to say, super good. In fact, I don't think bulls won't really be all that worried until we got down to, sheesh, here we could close, like we closed the gap this morning, but we could get all the way down to 303. The bears don't have control of liquidity, or sorry, the tension. They're not in charge. They're the counterparty. And the bulls haven't failed. So if the bears came in and decided to try and do this, what would be happening is the bears would be injecting capital into the market inappropriately. And they did this yesterday, where it's really helpful to see the counterparty jump into the market too early. The structure's not there. It's going to work against them. It's just no good for them. And that's great for the bulls. So what do the bulls want? Well, the bulls would love to see the bears get sampled. And I see some pretty close opportunities for that to happen. Let's take a look. Velocity could come up, hit zero right there. Then we'd get the trapped orders. That would sample bears. Decay could move under, but that would sample the bulls. So decay's not looking the best, because that would mean that if we get decay under zero, the bulls are going to have to act. And if the bulls don't act and they fail, then when the bears do get sampled, the bears are going to say, hey, the bulls just failed. And you can see that creates a little bit more complexity here. We're saying what we want is to see the bears jump in and act before the bulls get sampled, so that we can see them as prematurely injecting capital and folding them over. But if the bears jump in after the bulls fail, then what they're going to be running is elasticity. They're going to be taking that as a nod and saying, you guys failed, and you're allowing us to take tension down to zero. So this right here could become a problem. So the bulls would rather, I think, this get to here, see prices sit around and the bears hit and then fold them over, likely into the close or something like that. But for the bulls, the bulls get liquidity here. They're going to have to hit if that's the situation they want, because we could totally see decay move under and then sample bears from below. So we could get a bullish sample as it moves under right here. And then when it comes back, we could get a bearish sample there. So we could see the bulls hit, it moves up, the bears try to hit and then fold them over. We could see that situation happen, but it's a little more complicated because it requires the bulls to hit, hoping that the bears will also get sampled later. And that's totally possible. So these are the two little paths that I see right in front of us for the markets to have a couple events. And it looks like decay is getting really close to zero, and that could be one of the things. So it's important to say, what do these sides want? And right now, I think the thing that's on the mind is basically a gap and go. We gapped up, closed the gap because it was so small, and then has just churned all day. That's what these players want right now. In terms of what has been fueling this, I think the best tool right now for that is looking at the inversions. Finally, we got an inversion to sort of hold together, and it was messy. You could see right off the open, which isn't uncommon. We've seen that for like 3 days. And then it was able to push over it, got over, and it's up. So I think that this is going to be something to pay attention to. If we continue to grind up, when the tick finally pushes a new high, that is going to be a moment to note. You will need to pay attention to that, because that will be a potential pivot. And pivots can be right in the middle. So I'm going to put it up here and turn this on. A pivot can be right in the middle of a directional move. It can also be at the top of a turning point or a bottom of a turning point. So you can have a pivot right in the middle. It's a pivotal moment that either continues or reverses. What's important is that risk and the focus is a lot higher at that moment. So if I don't know if it will happen, but if the tick pushes a new high, that's going to be a moment to really tune in and take a look at what's going on in the market. It will matter, and it will matter likely into tomorrow. So it's going to be a more significant moment than maybe on another day, just because of where we are in this whole story of social justice and taking out the bears because they cheated, bad bears. So that's kind of the things that I'm looking at into the future. Now let's take a look at the events of today and see how that they're fitting into this little spectrum. The bulls want to see bears fail and liquidate them because it's the cheapest way to get prices rise. It would get the bears to do the work. And the bears would like to see the bulls fail and drive things down. Let's see how that's been working today. So the first thing, we're getting a sample now. So let's focus on that. Okay, so decay is moving down, and we're getting decay pushing under zero here, right here. And you can see the way this indicator works is sort of, you see how it's red there? What it's doing is looking for near-term highs and lows, like a high and low. And it's showing you that it did hit negative numbers, and the zero has a negative on it. So you can see that I should have done decimals. Maybe I should change that. Decimals so you can see when it's close to zero. But I think if you're looking that closely at it, you might be a little too close to the data. So we're getting here under zero. So remember the process here, okay? Do not get this backwards. First, you get the signal. And the signal here is that the internal energy in the velocity numbers is going negative. That negative number is being broadcast. It's like people see it. The second is to look for the response, the volume after. So you want the volume after the signal, because the goal here is to have the market hold up a sign. I know this isn't a sign. I'm imagining there's a sign on it. It says negative number. And then you see the participants go, oh my gosh, a negative number, and respond. And don't get those out of order. They can have some lag between them. You can have the sign, and then usually price will go looking for the volume to say, where is it? But don't get them backwards. So you want to make sure that you're treating that correctly. We have a signal being broadcast. Then we look at the volume, and you can see we've got about 9% here. I would love to see this push up. Either it finishes here, or it could last a little while, but I think what I would love to see is it go from 9%, which is about what it's been, and it moves up to maybe like 10 or 11% and then cools off. And I'd say, okay, well, it pumped. Like we had a little pump of volume there as a response. I would treat that as liquidity. If the volume shuts off at the moment the signal happens, I say that wasn't the volume. So I want to either see it pump or find new volume or something like that after the signal. Don't get those backwards. Okay, so the expectation here, are the bulls going to buy or not? And this is a little tough because we haven't quite gone over the data points yet for today. But looking at where we are with tension, you probably say, well, I think it would be better if bulls were to buy here. Otherwise, we're going to start running into problems. And you'd be right, because no matter what has happened throughout from the open to now, if these bulls fail, then the bears are going to take that as a nod to say, you can drive an elastic market down to zero. It's just true. So let's really quickly take a look at what's happened today. We have a decay retest right here, and that's a bearish one. So this is, you mark out the previous day's high, you can see it got there right into the high, you can see there was volume that happened, then there was some lows came in, so, and this pushed down pretty good. Now right above that, I'm gonna draw this out as an actual line on the chart because it'll just be easier to see. So with those, you mark out there just right above it, and if you say this is an institution, do they stop out right on the other side? A lot of times, even an institution will do that. So you can see right above there, scoot it down just a little bit, right above there. I mean, it won't be like one tick over, it might, sorry, I'm talking ES terms. It won't be like one tick or two ticks. It usually be like a point or so right on the other side. And you can see that the market sort of worked through their stop loss and then got to the other side of it. And that stop was the decay retest. So right here, we see that the bears, who were in a little bit of a pickle, not really. I don't know that the decay retest was a great trade because the bears could just wait for velocity to get to zero. So it's not like they had no choices. But we see the decay retest has already exposed that the bears have shown failure today. So that's the only data point that I really see. Now this morning, you can't see it. This is a limitation. Decay could have pushed down here and just intra-bar and then gone back up. I wasn't actually watching during the first few minutes of the market. I was doing something else. So I don't quite know, but if that did, then we would have bulls here. In either case, I'm not really sure that it's going to change what I think is going on. We have bears have struggled with their decay retest. This whole thing is about the bears, and now we're getting a bullish sample. So even if the bulls had bought this morning and decay had moved down here right at the open, which I can't see and that's a little frustrating, maybe one of you guys knows if that actually happened. I wasn't watching for the first few minutes. It occasionally can happen right off the open, and it would show that there were some bulls this morning, but I wasn't. So currently, I'm going to treat this like there weren't any bulls because I can't see it in the data. But I want you to know that there could be, because the intra-bar, this will move intra-bar because these bars are only a minute long, and it's difficult to capture intra-bar movements on this platform. So I'm going to treat it like there's not, but I want to put that out there so if anybody was watching for the first 5 minutes, if they know. So, sorry, I was reading something. Someone posted, and I'll get to that in a second. Okay, so we have bears gave a try. Like they tried to get a foot in the door, it didn't work. Now we're getting a chance for the bulls to get sampled. So you can see that the signal happened. We were able to get some volume after that signal. So I'm going to treat this like liquidity. So we're getting some bullish liquidity. How does this work? We see the signal, we see the volume. Now we're looking for the hit, and that's usually a price sweep. You see that price sweep. Why a price sweep? Because when you inject real money into a market, prices reprice. They slide because the actual capital balance changed. So the price needs to change to reflect that. You don't have the power to change prices. You have the power to maybe stuff the bid or the ask or something, maybe, but there's a really good chance you'll just get bigger fish. Somebody will just wipe you out because they can see what you're doing. If you have real money and you can inject that without any margin saturation, just pure cash, then prices move. So that's why I look for the sweep. The second thing is to look for tension. There can often be a little bit of delay in tension, in terms of seeing them impact it, usually that's contextual. What do I mean by that? I mean, if we have a situation where the bulls and the bears are fighting and the bulls buy in and they basically are just going to inject capital and try and get those bears to fail, then you'll see that curl, and it's sort of like a liquidation and their impact at the same time. That's a context thing that just makes sense strategically. Otherwise, it will just show up as a response to them injecting capital as they fill liquidity. And so right here, we're seeing that. We're seeing the bulls fill right there. It's moving up. And I don't see any spot up here for bears to be like here. We don't have any liquidity samples. There's no decay retest. It's just there. Then you keep your eye here on tension. And you want to see tension move positive. They need to impact the broad market. Why? Well, if you're a big, huge institution and you're going to fill an order, you don't just buy into the ES. That's silly. You buy the whole market. We're looking for big, huge trend traders, not little intraday people who just trade one security. We're looking for the kind of guys who have so much money that they need to be filling everywhere, all over the place. They're filling options, stocks, futures, indexes, because they're just so big. They're like, we think this is going to go up. So probabilities need to change. Otherwise, you're really not the kind of trader we're looking to look for. You're just not big enough. You're too tiny. It's little. You got to be big enough to actually make a difference. So if you're watching a basketball game, 30 years ago or 20 years ago, and you saw Michael Jordan hop out onto the basketball court, he's a big fish. He would have made a big difference in the probabilities of that basketball game. If you stepped onto the basketball court, probably would have brought the probabilities down against you because you're terrible. And it's sort of like if you look at the skill base there would be the amount of equity you're injecting into the market. Michael Jordan has a lot of equity in terms of skill. He would change the probabilities of the game big time. You don't. In fact, you're just consuming one seat on the court. And you're terrible, and they'll crush you, and you're not tall enough probably. So it'll bring it down. So that's kind of how this is working. We're looking for people who are big enough with enough skill, enough equity in their trades that the probabilities are actually going to change, and we'll see that in tension. That's what we're looking for. We're not looking for little people who just fill a spot on the court, or we're not even looking for people who just are sufficient. We want game changers. Game changers are the people we're after. You don't just chase anyone filling around. Just seeing 1,000 contracts on the bid is cool, but whose is it? Because that's going to make a big difference. If that's Michael Jordan sitting in the queue to get into the basketball game, and he's that 1,000 contracts, he's sitting there waiting to hop into play, that's a big deal. But if it's your 1,000 contracts, the market's probably going to come down, hit those 1,000, and run you out as fast as it can, because it's just free money. You're terrible, and they know that. And you're probably also getting margin saturated orders. So your broker's taking the total sum of all the cash you think you're injecting, and they're chopping it down a percentage, and half is debt, half is equity, and they're taking a lot of that money and putting it to work against you because it's just free money. That's just what the market can see. That they're not dumb. So there's a little okay, so back to what we're doing. So we're looking for a sweep as the price changes from equity deposits, and then looking for an impact on tension. That tells us this is the right kind of player. We're not interested in the other kind. So these players come in, they look like they're consuming liquidity, and you can see tension looks like it's starting to have an impact. If you remember the condition we're in here, we've already seen some failure by the bears, and the bears are wanting the bulls to screw up, right? That's the goal. So we're in this little bit of a window here where you need to ask some really serious questions. If you're a bearish player and you want to sabotage, this is essentially espionage, because we're looking to go to whoever's controlling the market, do what you can to change the opinion of the population and everything, and then topple the controlling party to take over. It is, in essence, espionage. So if you think of it that way, the bulls are finally picking up some liquidity today, and you can tell the bulls, their root positions are essentially all down here in this area. Well, this is the secondary position. Their primary position is much lower from back on Thursday. So today they're getting a fill here, and that's really not super close to the low. So it's a little bit high. So if you're a bear and you're trying to think about espionage, you could see that you have a little bit of a window here where if you decided to flex a muscle, you might be able to change some public opinion, right? Like you could push this down, try to sabotage this bullish position in an attempt to see if you can get them to fail. And so this looks to me a little bit like attack time. It's like you guys have a very small window here. A little bit, if the bulls get this to move up here and you see tension curl up, your little window ended. So it's been all day, and now we're finally getting a little window. It may be that the bears get feisty. So they've been upside down since yesterday afternoon. They've been itching to do something. They had a little bit of a failure today. I'm not treating this position here as a cash average because I think they had other options. Remember, a decay retest, and maybe I need to say this, decay retest is for people who have no other options and they want into the market. And the question is today, this morning, when you saw it, did the bears have no other options? And do you believe they wanted into the market? And I think that the bears could have waited for velocity to come up to 0 and sample. This could have happened. So they had another option. So that breaks down the first premise. And second one is, do you believe bears are trying to get into the market? And they got blown out yesterday. Just summarily crushed. No. So I don't think they tick both boxes. So I'm not treating this like them trying to cash average a loser like the previous time we saw this almost exact data set. So I'm treating that different because of the context. I don't think this was them going, we just can't help it. We're trying to salvage things. Oh, this was them going, we got screwed. Here's a decay retest. Maybe we could do a little bit. And you could see the impact was actually, or the resulting price, you could see that it moved down. And in my opinion, that's fine. The bulls didn't give a crap. They're like, go ahead, let them. I don't think there was any resistance. The bears came in, injected some capital, brought things down, and the bulls were like, congratulations, we're about to topple you again. And that's exactly what happened. So I don't think that there were really any great bears here. I think this was more than anything, it was the shadow bears. And the shadow bears are the people who can't keep up with the context well enough to actually see genuine intent. They keep up with the context well enough to see when risk is good or bad and make the assumption that institutions always consume all low risk. That they make that assumption and they try and front run them and stuff like that. And it's not that they're not smart. It's just that I think that the shadow bears have a limited scope on the narrative. And so they miss the genuine impact here and the overall story. And so they'll try and jump in and front, and maybe they're right, maybe they're not. It's not like they're doing poorly. So it's just that I think they hit everything. Where I think institutions only hit what makes sense in the context in terms of a competitive game, like game theory and emotional states and attack, defense, who's in control, who's not, possibility space. It's just more complicated. So right now you can see that things moved up. And look at this. We're getting that, remember, decay popped up. We got what I call a switchback, and this is something you really have to watch. It's when the numbers sample one side and then switch back quickly. If you've ever hiked a mountain that has switchbacks, you know what I'm talking about. It switches back and samples that, and it's what it looks like is a switchback. And hit those, is giving those bears a chance to get sampled. So why would the bears want to take this knowing that they could get their faces ripped off? Think about the espionage. Think about what they want. Think to yourself, well, if bears are ever going to make this work, they need to inject some capital and hope. And I think this is a big deal. Hope that those bulls are confident. The bulls have had everything they wanted, especially throughout today. They're getting a liquidity sample up here at the highs. The bears are getting liquidity right on the back side of that. They're face to face. And I think the bears are more motivated, in my opinion, to inject capital. And so, okay, so we're seeing that come down. This is important. This is important because it tells me that the bears are still, they haven't like walked off. Like they're still sitting at their desks. They're still going, can we make this work? Oh my gosh. Well, can they? And that's the question. And looking here at tension, it looks like there's not a whole lot of impact by these bulls. I think the bulls hit I don't think we've seen the bulls impact tension. This is trouble. This means that the bulls have been riding this inversion up. They've been enjoying the spoils, and now they're getting to a point where they're getting some liquidity and they're not doing quite enough. And you're just like, oh, come on, you guys, like, we could spurt this higher. You could spurt this up. We could get tick to shoot up, blow out the inversion. This chart here. So you're looking for, we could get this to move up. We could get tick to shoot up, blow out the inversion. That could absolutely get prices up to 30, 75 in that. We could blow them out. Then don't be active, right? Like, come on, what's wrong with you? But remember what stress testing means. Stress testing means that the counterparty shows up. They have real and genuine opportunity to take over and fail. You can't have real growth without real risk. The elimination of risk is simultaneously the elimination of the ability to change. The fact that you have the ability to have agency is the ability to grow. It's not the ability to destroy yourself. You can get destroyed without risk, but you can't become more without risk. So in this instance, I think if the bears really want to control a trend, they have to take on more risk. And that means allowing the bears to do what the bears got to do. You can't run a trend without a counterparty. If you scare away everyone on the other side, there's no winning. It's just you. So we've got a couple of philosophies here that are really tough to deal with because they have these deep implications for just people and markets. And you might say to yourself, oh, that's silly, that's crazy ideas. But if you don't keep these concepts in your mind, that stress testing means allowing the counterparty genuine ability to control. That also means you take on genuine risk. If you don't keep that in mind, you're not going to understand why the bulls would do that. Why? Well, you're not going to get real risk taking by the bears if they never think they can really win. And you're not going to get any real wins by the bulls if the bears didn't get duped. It has to happen. So that's, I think, where we're at here. I think the bulls are showing up. They're not doing much. This is putting the bullish control at real risk. This is game theory. They're playing a game. They're saying, well, maybe we come in, we hit that liquidity, put a pin in it, and the bears come in and they say, well, let's hit this, and they're doing that. We're starting to see a little bit of shift here. That's what's happening. Why? Is it because the bulls are terrible? No, it's because it's essential in growth. It is essential. You can't make progress without it. So are the bears going to win? They might get a little bit more of a foot in the door than you want. Because if you're sitting here trying to buy into a slow grinding rise, of course that's not what you want. You don't want to see the bears do anything. But the bulls have a really great position. This is a big swing trade that's been building for almost a week. So they have a huge problem with the bears driving this down a little bit more, maybe getting tension closer to zero. I don't think so. I mean, if it worked out like yesterday, not at all. That's great. That'll get better positioning to see if we can continue to get this to rise. Now, yesterday was a little bit different mentality, like in terms of what was going on. Today, I think, is different. So I think the way you could think about today is the market has cooled off in terms of conflict, and we're getting to the point where we're going to need to re-stoke some fights, some battles between people. I think Wednesday sort of put a nail in the coffin, and then today we've been seeing it just pay out to the winner, and now we're getting to the point where the winner gets to take a position, the loser gets to take a position, and we're trying to re-stoke that fire. We're essentially trying to stimulate volatility. Volatility does not mean down. It means wider movements. In terms of volatility being measured through option premiums, that typically means down because of things. But in this instance, when I say volatility, I don't mean down. I mean conflict, which is when both sides start taking positions, and you tend to get compression waves with higher volume at both sides. So those compression waves mean that people are positioning and they're getting conflicted, and at some point somebody loses and you get a blowout. It just has to do with how conflict works. So that's where we're at right now. I think the market cooled off as it moved, and now it's at the point where that we need to develop some more conflict. So we have the bulls and bears face to face, the bears injecting some capital, pushing things down. Take a look at that. I think they even impacted tension. So we have bears here, right there. We have some bears showing up to play here. The bulls, what are you guys doing? Right? They got sampled and no impact. So the bulls have just failed. We're seeing the failure by the bulls. They stepped out of the way. They said, yeah, go for it. Why would they do that? This is starting to look like it wants to generate elasticity. But I'm not sure there's enough time for the bears to get a whole lot done right now. We could slowly turn these guys over, see that get up. So there's this window of risk time where that you need to know what you think is happening in the market. And this is the hard part, okay? This is one of the more difficult parts. Typically, I've been streaming later into the evening because it allows me a chance to go through all the risk windows and stuff like that, and we could take a look at the events of the day and unwind what's going on. Right now, we had very little go on this morning, and we're in a risk window. A risk window is a time when you have conflict that's happening that suggests both directions are very possible, and it is inherently risk. It's just pure unfettered risk. And if you don't have an idea or a preconceived notion about what's going on, you can't interpret it. So one of the ways that you can actually measure if you understand what's going on is how that you deal with risk, because risk is that moment that points against you and it says, hey, this is going to destroy you. And if you don't have a good understanding, then you will only interpret that at face value. And so it's impossible to hold through risk windows, or these little windows of time where there's risk. So right now we have bulls and bears face to face. The bears just hit. The bears are impacting tension. But let's look over this whole narrative. We had a little bit of failure by the bears already today. Not amazing, but we already had a little. Okay, so why would the bears be active right now? Because they want to topple those bulls. Look at that. They're trying to get tension down. They want to get tension down to zero. That's the whole ordeal here. Did they do it properly? Close-ish, yeah. Because the bulls popped in just a minute ago. They needed bulls first. We got the bulls first. Right there. They needed that. And then they need to see those bulls not impact tension. Then they could hit, and then they can start thinking that way. Now, will the bulls allow this to happen? I personally don't see any reason why the bulls wouldn't, because they got everything they wanted from yesterday, so why not? And the bears are very motivated, so we can get them to inject some capital here out of that position. And we'll see that as tension moves. Maybe we could get tension to get down, maybe here. If we could get tension down to from -16 down to, I don't know, -5, that would create some really good overnight conflict that could drive markets tomorrow directionally. I'm not saying which way, I'm just saying it could drive it directionally. So that's a really good possibility for the bears to be able to accomplish. But it doesn't actually achieve their goal, which is getting 30-minute tension over zero. The point is, I think they have some motivations to do it. And I also think the bulls have some motivations to allow it, because it would get tension down lower, which is sort of what's been happening today. And then the bulls could pick up a future opportunity to buy that in and pump tension up. Now, in terms of will this happen? So we've marked out the possibility space. I think there's motivations for it to occur. If we bring this down a little bit lower, where would it end up going? And I think the most reasonable place would obviously be about right here. This is the first spot. I'm going to move that out of the way, where those bears first were seen. The next place is obviously going to be this position, which it's basically the open of the low of the open. The next spot would be where I think this spot here is the most reasonable place after that. These are the spots where you have most likely major players sitting in positions, and you'll see activity. It does not mean they will defend their position. It means that they have positions there and activity will increase. The bears are essentially, this is the only place we can see them at. So I think this would be the first place to say, well, that's about the room that the bears have to work with. likely before that they're stuck in a pickle. So they've got a little bit of room here to work with. Is it enough to accomplish their goals? Is it enough for the bears to get what they wanted? Can these bears drive this down and get tension down to 0 in that little window? And I really don't think they can. I really don't think that makes sense. I think that's insane to think that you could get tension even a lot closer to 0 right there. I'll mark these over here on the ES. I think this is there. Those are probably the ones we're going to be dealing with, and they're getting Thinkorswim's new, like, hey, let's mark your lines everywhere. I actually don't really like it. I think it's kind of annoying. Where they sync your markings across charts. So if you haven't set up special default like setting things, it goes everywhere, and it just feels like, I don't know, it's annoying. So I think by default it should be an individual marking, and you should choose to have it sync, not have it sync automatically and then choose to have it not sync. Because then if I draw this on there and I'm like, wait, I don't want this on all my charts, it's annoying. Okay, so anyway, I think that I don't think it makes sense. I don't think that the bears are going to be able to get tension here down to 0. No. So what are the bears trying to accomplish here? What are they doing? Okay, so remember, the bulls have just failed. The bears are in. They're looking at elasticity. That's what's happening right now. The bears say, thank you, bulls. You moved out of the way. Thank you, thank you, thank you. And they're going to try and drive this down with the intent to get tension down at least close to 0. That's the whole objective here, close to 0. I don't think they're going to be able to accomplish that. So think to yourself, well, why would you do it if you can't get it? Well, they want to inch it as close as they can. I mean, you want to get as close as you can with these charts. What does that mean? Man, if we get this just down here, they'd be happy. Here would be great. I really think like right here, like closer than -5, maybe -2 would be amazing, because that would create some real conflict going into tomorrow. I think that would just be ideal. What would have to happen to get that? Something dramatic. So this will have to make its way down to at least the first support level if they're going to get that done. Now, why am I pointing this out? Well, am I saying that I think that's going to happen? I'm saying that's what would need to happen. And the reason that I focus on what needs to happen is because I need to see the possibility space here. I need to see, if you're going to get what you want, what do you need to do? And in my experience, and this might be an experience estimation, this dive here, I'm correlating price movement to tension movement, which I don't have a strict measurement for that. So on this charting here, so you can see that I'm just sort of guesstimating here. I'm saying, well, if we're going to get tension to curl down aggressively, we're going to need to see price likely move aggressively too. Why? Because in order to curl tension down, you're going to need big players to alter their positions. And that means prices are going to move. It's going to be aggressive. When you're dealing with making tension accelerate or decelerate, you have to see prices move a ton, because you have to get big players to move their positions around. So that's our limit. This is moving down. The bears are getting excited because they can see, well, right here, they can see that if we can get tension closer to 0, that means tomorrow. This is what I think the bears are thinking. We want to get into the best position we can for tomorrow. I don't think the bears are thinking, this is the top of the market. Let's topple this. Let's drive it all the way down to the bottom. I think what the bears are thinking, okay, the bulls just stepped out of the way. Let's get into our position and do as much damage as we can so that tomorrow we're in the best possible position to take control of the market. That's the mentality. It's not about actually winning today. It's about just doing your very, very best. Now, the bulls, on the other hand, are sitting here thinking, okay, let the bears do what they can, and we step back and let them do the thing, don't fight it, and hold. So they're holding from very far positions. They're way out there. I don't think anywhere in the bearish mentality are they thinking, let's topple those positions right now. No, the bears are thinking, let's get into the best spot we can. And that's why I think that this is the spot. So if the bears had a spot here, then moving under that is going to create added resistance for them, because you have to start paying these people who are paying out. Now they want to collect, and it's like, well, moving them positive means that you need to figure that out. and pay them. So that's what I think they're thinking. What types of tools, okay, so we're going to shift gears here. What type of tools do the bears have, we're shifting gears, to make this happen? So we just went from motivations, like why would they want to do this, to what do they need to get that going, to talk about where they can go and the scope of their trade and what they're likely trying to accomplish. Now we need to talk about how you accomplish this type of thing. How do you do it? First of all, this is likely full of shadow traders. So they're gonna liquidate probably down here. I would say probably near that, something like that. These guys are gonna pay. This is troubling for the bulls if you're an intraday bull, because these guys are gonna liquidate. And you'll see it when price pops down. So if you're sitting there watching a tick, you'll see it go bam, just 2 points, just instant, a flick. And what that shows you is that there was a big shift in money. In other words, they unwound their position, price popped, and then take a look at tension, and you'll see tension curl down at that same moment. You'll see this little, and that's going to tell you that that little position there, which failed, we saw them consume the liquidity, we saw them hit, but we didn't see them impact tension. That little position is going to have to unwind. That's going to cause a liquidation. That means bears can advance prices. So right now we have bulls underwater from this position. And I think the scope of the trade is about here. And maybe if they can convince these bulls, which I don't think they're doing any mind games here. It just looks like bears are just like going for it. They want to liquidate that position. So look for the sweep down, look for tension to curl, and you'll say, there it is, the bulls just liquidated. Typically, that's about as far as they're going to get it, because then they would need another mechanism to get it going down. Why do I think they need, why am I so, they can just push things down. Yeah, they can, but just coming in and brute forcing the market down usually folds things over. That usually doesn't last for long, unless you have a really good reason to do that, and I don't think they do right here. That's not a long-term mentality. Right now, they're trying to liquidate these bulls to get things down, to try and get tension to probably move down like that into the close. I think that's the whole goal. The bears are thinking, we got ourselves an elastic concept coming in. We got tension curling down. Let's push until these bulls fold, right? And hopefully we can do a ton of damage while we do it. Outside of that, the mechanism that they would need to figure out how to trap in some bulls and fold them over to get further liquidations. They would need that. Can they find that? Well, I'm sure a lot of you who watch these charts all the time are seeing that we're getting a decay retest off yesterday, right there. Okay, so with a decay retest, a multi-day retest, I typically look for something I call a wide short. A wide short doesn't mean shorting. I mean, it's a really wide sample in terms of time, and then a short amount of time it will retest. So I look for the first one, then the intraday second one, kind of like that. So right here is where I would be looking for this. So we've got, that would be about where the wide sampled, and this is going to be the short. This is the one I watch. I watch the wide short, especially on the long side. This is just sort of, it just happens a lot, the wide short. So we got our first test, and now we're getting a little second one. This is the one I'm going to watch. Remember, a decay retest is for somebody who has no other options and they want to get in. Let's take a look at the bulls to see if a decay retest makes sense. First, do they have no other options? Well, velocity's down, decay is down. They don't have other options in this instance. The other option, I guess, could be tension getting to zero might inspire some action. But since they're out of time, this is not an option. So no, they don't have any other options. Do they want to get in? Yeah-ish. I mean, they don't want to completely lose control of the market and skid down into the close. I mean, this is not what you want. So I think there is some desire to get in. They meet the first qualification. So what does that mean? It means that we can now look at this and say, this is a legitimate decay retest for the bulls right here. And now we have, there it is. There's our new high, our wide short. Here's volume on it. So we have all the pieces we needed. The wide sample, the short sample, the new high popping in, showing that the market itself is lurching. So we have a bullish decay retest right here. Okay, what does that mean? It means that bullish decay retest is cuts down on your risk, but it exposes your stop. We all know what your stop loss is. It's clear cut. it's going to be a little bit below this current pivot. So right down about here or something, right in this little zone. And you'll see it because it snaps. It's the same thing you always see. It's a snap. Price moves down, it snaps through it. Now, will the bulls pick this up? I don't know, would you? If you had a position that was from yesterday, you were able to buy into the whole dip, you held it, and you're sitting here looking at this right now, you didn't really do a whole lot today, would you buy this right now? That's how I feel about it. No. This is just, no, I would just keep holding personally. That's what I would do. I think that the bears have more motivation to snap that through, hopefully hit the liquidation from earlier right here. They can liquidate these bulls. They can liquidate these buyers right here. It's likely just buyers. And we can snap that down, get right down to that level that we were looking at from earlier, do as much damage as possible. I think that's what the bears want. And the question is that desire greater than the bulls' desire? Yeah, absolutely. Right now, absolutely. So I think that this is going to topple, can come down. We're going to see those liquidations happen. And then what I'm going to do is say, look, guys, the bulls, you get teeth. And teeth are where that everything lines up, and then it stops out all that stuff. And you're like, oh, but it all failed. And it's like, it didn't really fail. Actually, it's working the way it should, which is when you're getting into a secondary position, you don't buy into a new signal. You buy into the failure of that signal, because then you know you stabbed your friends in the back. And that's the best way to make money in a market in a continuation pattern, is to destroy the people who are on your team, sadly. So, well, the new people, not the original people. So, you know, if we have shadow traders who popped in here thinking, oh yeah, it's a great opportunity to buy, and then the counterparty comes in and says, we are significantly more motivated, and then the bulls fail and it comes down, these shadow traders are going to provide some liquidity down here. And I'm not talking about liquidity for bulls to buy. I mean, they're going to liquidate there, and that's the bears motivate. They're motivated to push those guys out. Then we have a decay retest that's sort of got a first part, and then the second part, I watch this one. I think sweeping that down through, we get the snap, and boom. Well, there's delay. Somebody just told me that the voice and the video are out of sync. So I think that is YouTube. I don't think they like when you live stream. Okay, good. Okay. He said it was fixed. Okay, so do you see how these motivations are fighting each other? We've got the bulls who are like, and then we have a couple positions showing up that I think are really just pulling in shadow traders. And then we have the bears showing up, and they're going, oh, we want this because we have a good motivation. If you have to model out that motivation to really get an idea of why these players are going to do what they're going to do. Why would the bulls fail? They're winning. It's part of winning. Why would the bears jump in and do so much here, even after all the things we talked about? It's like, well, that's what's going on right here. We really should liquidate these two positions. Slam it down, see a hammer. Just a nice little pop down to that previous support there, right? Like, and then hopefully into the close, which is an hour. They have an hour. Hopefully they can get this down a little bit lower than what we have projected here. And right now it's projected, this line here is, it's 10% counterforce, and this one's positive 10% counterforce. And it's just a general rule of thumb. It's not a hard rule. Get crazy about hard rules. It's just when you tend to be under 10%, you're near zero, a stress test could easily flip-flop tension. If this was at 9%, negative 9% here, and we were starting into a stress test where we were letting the bears hop in, and we were saying, okay, let them do the thing, well, they'd be sitting here, and they could get it through zero by the close. But if you're up here like we were looking at earlier, it's like negative 20 or so, it was like, well, it just is a function of this whole stress test concept. Is really why I put it in there, is because it has to do with, can the counterparty flop this over quickly? And under 10% is not super far. I mean, you could see about how much tension moves. Just a move like that is a good 10% off of whatever it was. So if that had happened here, it would have gone under. So that's why those lines are there. So get it to 10% means if we open tomorrow and tension opens right where it closed, it would be totally feasible to get tension under zero, which could drag heavily on daily tension. So that's what those are there for. And you can see it's sort of projecting to about 10% right now. If these conditions just persist into the close, that's likely what we're going to get. So I want you to keep that in mind. The motivation. This is a big fat deal, is the biggest deal, is the fact that if you can understand the motivation of both sides, then you can say, oh, I see why the market reacted and treated these signals this way. If you don't understand those motivations, then when you see this whole thing play out in front of you, you think, well, the buy signal failed. That somehow indicates the statistical model of this indicator, and I need to go fidget with the K values and scale things differently. And no, you were misinterpreting the motivating factors in the market. And so you're looking at signals that failed as though a failed signal implies your method is a failure. That's just not true. And I think that this sort of mentality really functions across a lot of tools. Anything especially that uses any form of digital signal processing, which is the conversion of analog to digital and using calculus and things to smooth things out into digestible patterns. When you're using that kind of stuff, you can usually project those type of things into the future. And those projections, the fact that you can use calculus to project acceleration, velocity, and momentum and things like that into the future is really what gives you the ability to start looking into the future. I know the market's stochastic, but people still react to things they see that are coming. So tension is sort of like that. It doesn't quite function, but it sort of functions in that way, in that we're trying to use the magic of math, and math is the capacity to know what you should not be able to know, things that you should have had to go count by hand or do by hand or have it watched. Well, you can use math to calculate what they were, are, or will be without actually physically being there. You can know these things without knowing them. We can know where momentum is going because we can project it out. So that's the whole point of it. I think if you're using a momentum analysis tool and you're not projecting it out into the future, you're completely missing the point of momentum. You are 100% missing the point of creating a momentum model. You create a momentum model so when you throw a ball, you know where it's going to land. So why is it you're using a momentum tool that you're modeling where the ball is in the sky? What? You're supposed to be, that's the whole magic of math, isn't it? So, okay, that aside. So right now what we're doing is you have to look at those motivating factors, which is the persistence of momentum, the fact that momentum tends to persist into the future. And that is giving us an idea of what we're looking at. And I look at possibility space, which is the scope of things that are possible, which means defining what is not possible, right? Usually you start by defining what can't happen, and that tells you a lot about what can. You get that scope, and then you start building streams of possibilities or realities, and then they'll start to coalesce, and then you start to see which road we're actually going down but you have to be quick enough to actually create this whole scheme in your head and then see it develop. If you're not quick enough, or you're just sitting down every 20 minutes to take a look, what's happening is you're erasing the possibility space, sitting down and going, okay, everything's down. Okay, what's your possibility space? Have you built out which way things can go? Have you looked at momentum and motivations and everything like that? Have you looked at the emotional conflict? Have you looked at what's happening? Have you looked at any of this? And then you sit down, look at the static numbers, just where they are right now, and then you try and make an assessment about where things are going to be tomorrow it doesn't make any sense to me. You're not engaging the market properly. And you're missing the most powerful calculator you have, which is your social intelligence. And that is what gives you a huge edge in this market, is the fact that you can understand these people and why they're clicking their buttons to buy and sell, or algorithms, or why they would call up the news station and say, we pay you $1 million a year, say these 5 words, that kind of thing. So that's where we're at. Why do I think that let's wrap it back around. I know I've been like almost venting. I vent about these things. I don't know why. I think it was just the way I was raised. So why do I think that the bears have a chance to bring this down and take out these stops? Well, that's what's going on. That's what's going on right now. I think it's sensible. I think it makes sense. These bears could inject a little bit of capital, get some footing in the market, or at least move things closer to where they could get control of the market. And it would be at the detriment of the bulls, which is great. It's subversive. It's espionage. We could change a little bit of public opinion. Does it gain control of the market? No, it's not. No, they're not. They're not toppling the controlling party here. The government that's in control, the governing body, the winning body is not losing control. But they are allowing the stress test because that's really, 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 really important in markets. So we can see this pop down and try and hit those stops there. There's some stops here. And then the bears are pretty much going to be done, right? Like that's all they really got. I mean, the whole scope of this is just down to about here. That's it. And look at that. So tension, we're at 57. The chart, this is one thing it's already back at 57, so about here. So it looks to me like the bears have done what they're going to do. They were able to push down, maybe one tick stop a few people who had too tight of stops on there. Tension, you could see, has slowed a little bit right here. It looks to me like the bears gave it a go. They saw a window. They're not going to accomplish a whole lot into the close today. There it is. So this was a little bit, I consider this a risk window. I think that right now it's done. I mean, they got done what they're going to do. It's over. That was the stress test. It was pretty pathetic, if you ask me. We got it down. We got a decay retest, some other things. So now we're going to be looking at tension. So give this a second. There's a little bit of a pop in this at the very few first seconds as it loads in all the data that it's looking at, and then it'll readjust. So what we're going to be looking at here is can the bulls now have like a delayed impact on the market? And this is going to frustrate you if you're following along. I know, but I know it's going to frustrate. Can those bulls who got in earlier now impact the market? These bulls here who got in, who didn't impact, and then they let the bears come in who did impact, and then we get decay retest come in, who tries for a one tick trap, now it curls up. Can they now impact the market? So before I answer this and we work out how this could possibly work, take a look at what causes tension to curl. Do you remember our objective earlier today as we were going into the stress test? By the way, I think this is moving up. I'm going to start rambling, and I want to say I think this is moving up into the close. I don't know that we're looking at a new high into the close, but I think the bears are basically got about what they're going to do. They're out of time. They ran out of time. I wouldn't be shorting this. I think that's it. So I want to say that real quick. Okay, so how could this possibly work? Do you remember the issue we were having earlier? I said we had the bulls coming into the market, and they would love to buy into the market and then take out some bears because you need the counterparty to pay, right? There wasn't a counterparty. How do you get the counterparty? Well, fail. That would work. And look, it did, didn't it? Does that look like it failed to you? Yeah, they didn't impact, and the bears came in and pushed. We got a decay retest. They pushed again. They pushed one last time right here. So there's about 3 pushes, 3 sigma push, or whatever you want to call it. Now what you're going to be looking at is, okay, so did the bulls lose control of the market? No, not even a little. So this is, you ready? Teeth. Oh my goodness. Bulls came in, and the position apparently failed, and this is teeth. This is because this is terrible handwriting. I'm going to try really hard to get legible teeth I can write. What do I mean by teeth? I mean that these bulls have an original position that's significantly positive, and they're not that concerned with seeing these shorter term things get stopped out, so they can handle failure. So if you were to look at this again, and I brought this up yesterday, bring it up again and the day before even, teeth is where that you look for those positions to show up, you create that conflict, you see their failure, and oftentimes if you want to chase a secondary position, or tertiary in this case, you wait until the position fails and buy in on the failure, not at the moment. And you have to keep that in mind because this is all context. Okay, so I was talking about this earlier. I was like, eventually I'm probably going to call this teeth. That's what we're getting. It's difficult. It's supposed to be difficult. They don't want you on the trade. Your position creates another mouth to feed. So teeth is a very sensible thing to do. The bears got a little bit of footing, right? Like they got some, right? They pulled tension down a little bit. Look at what tension's doing now. So what this tells me is the bears are going crap and it's pushing up against them. You could see tension starting to flatten out as these two teams now are face to face. The next event that's a big deal, I think, for how this closes, okay? The next event, there's one more. So we had our little bears come in here, and I say little because they're, maybe I shouldn't say little. You know, I say little as a way to say that this is their first position and they're coming in as new, but maybe I shouldn't substitute new and little. That's sort of, I think it's emotionally juicing. So, okay, so these, we see the counterparty come in and attack, and they get a little footing. I mean little because they didn't actually get a whole lot with tension. It was a small amount. So that's not emotionally juicing. Man, words. Okay, so the next event here is to see if the controlling party is going to run over the counterparty's stress test. We just walked through a stress test. They're frustrating. They can be difficult to trade. They're terrifying if you're trying to hold. If you were in a long position and you held through that, you have a backbone because that was tough. But it's not over yet. The next thing to do here is to look for this. We're going to have a bearish sample here, and we're going to have a bearish sample here. This is the next event to look at. Can these bears pick up more liquidity and possibly push again? Can they? Will they? I think that the bulls have no problem with that. I'm not sure why they would have an issue with that. The bears did okay. They were able to accomplish, I think, in essence, all the things they were after, which was turning that position upside down. They got tension to accelerate a little bit in their favor. They were able to one tick a decay retest, which is sort of lame. I mean, if you have your stop one tick on the other side of a recent pivot right here, you're lame, because that means that is the most conservative red flag that says I am scared out of my wits and I don't have any money in my account. Margin call me. I've never heard it. Like that is I think it's a pathetic place to put your stop loss. If you have a position and it is right there, if you think one tick is going to save you, you are so hopeful it's ridiculous. You don't believe in your trading system, you're terrified, and you're just an easy target. I really hate the idea of one ticking your stop loss on the other side of it. If you think it's going to stop you out, you should exit and re-enter. I know that's a horrible, I'm not going to go down this rabbit hole, but okay, so they one tick that there, it's pushing back up. And so what's the market doing now? It's looking at sampling the bears again. That's what this is doing. Can the bulls come in and impact this? Yes, absolutely. They haven't lost control. If the bulls come in and say, never mind, no trouble. I think the bulls or the bears kind of got done what they're doing. It zoomed back up, or pushed back up here, right here. And you can see that price pop back up. They got the whole turn this upside down. They one tick that. It was a little pathetic if you ask me. Like they could have dipped it much further and gotten more. And maybe they still do. But I think at this point we could see that the stress test has sort of run its course. Now, can those bears get another position and drive it down? This is a really complicated question to answer right now. Personally, I think that trading this into the close at this point is going to be difficult. So you might use some mechanisms that try to trade the idea of a lack of clarity. So I think the clarity is not super great. We have granularity. So if you have trading strategies that sort of say, I take advantage of when people have no idea what's going on, that would probably be a good strategy to try to employ now. If you're trying to use a strategy that says, I'm going to try and take advantage of people knowing what's going on, which tends to be directional movement, you might want to hold off a little bit. We need to get some clarity in here. We have a little bit of a struggle. The bulls have control. They let the bears stress test. The bears got done with their stress test. It's leaning back up, but the bulls are now running into a problem. They're going to get a sample of the bears right here or right here. One of these is going to happen if things rise a little bit more. And I'm not entirely certain that if I was bearish, I'd want to just blatantly inject capital into the market. That would look scary to me, personally. I would want a little bit more framework. But these guys here, they could still come down and get a little lower before the bulls actually have a real response. This is a big possibility. We're still in the risk window. We have not really established that the bulls have stepped back in. What we have established is the bears' first leg of the stress test is done. Things moved up. The bulls, who I think could have said, hey, let's just buy into this, just push it back up. Well, if we start buying in now and we have a position upside down, we're going to run into a wall here. So this is a problem. We need to see those bears get sampled again. I would just love to see this, get those bears sampled again, and then nothing. And then the bulls at that point would say, thank you, we have somebody on the counterparty to pay for this. We can shoot this up higher, and maybe we get the tick to exhaust itself, the tick to shoot up to a new high. Otherwise, if that doesn't happen, then I think what's going to happen is the bears will again get emboldened. So these are our two little things that are showing up. We're getting these two ways. Which way is it going to go? This is going to have to do with what you think is going on. Do you think the bears will get emboldened here and bring this down and do this? Or do you think that the bears are going to get sampled again because they didn't gain control, and then they will fail, and the bears, these are our two paths. I think personally that the bears didn't think they did their stress test, right? And I was saying earlier, I think this is headed up. So I wanted to make that clear before I started to ramble on about how I'm going to go through looking at this. What's difficult about this is that there was an entry here, and there was a two-part entry right through here, and then they one tick stopped it. That's teeth. So this was tough if you were like, well, I want a perfect setup. And you're like, well, we're looking for teeth, right? So maybe don't expect one. It also was difficult because we had a sort of, I think, a pretty clear little support spot here. We didn't really get there. So it's like, I think it's sort of leaving a bunch of people in this little zone here going, I want it in, right? FOMO, right? Does that sound like FOMO? Fear of missing out. Oh my goodness, FOMO, this group here. So they'll probably want to come in and assist and buy because they're missing out on this whole thing. And that's reasonable because it was hard to get in. The risk was there. So I think up is more sensible. But can down happen? Yes, it could. Is it likely? It's hard to tell. I mean, this is a situation where if you were in a position from yesterday, you could hold through this and watch for this whole battle to play out. But if you're trying to initiate an initial position right now, you have some risks that are difficult to grapple with, which is the fact that the bears could bring this down and go a little bit lower there, and you might get stuck into that whole thing. And if we have a group of traders who are trying to FOMO the market, that can help with some implied demand, but I think really only after these bears get sampled. I would love to see the bears get sampled and not do anything. I wouldn't love to see the bears get sampled right into the close, but that's where we're at. That's what the market's looking at. So I still think up is more sensible in this case. I think the bears got a little bit of a chance there. Good job, bears. You did a little bit. The bulls didn't lose control, but I want to make sure we're modeling both sides. One of the things that could probably be confusing for you, if you're listening, is that I don't want you to get your head stuck in one of the possibilities that I'm trying to model out. The point is that I don't want to just model the thing that I want. I want to model all sides. I want to be sitting there going, well, could the bears do this? Could the bulls do this? Make sure we've got a good picture and see how they're developing. And then keep coming back to them to make sure that you're continually filling those things out. How you take advantage of these situations should be pretty individualized to you. Like if you're sitting there looking at this and you think, I think this, or I think that, or I think this makes sense, you should be able to see what's going on and then make a choice based on how this is looking. Use your strategy that gives you your opportunity to, and you say, here's the narrative, here's what's happening, here's what I'm going to do to take advantage of it. That's the whole goal. It's not to say that one thing or the other. It's to model this out so you can get an idea of why things moved the way they did, why they reacted the way they did, why this whole thing's happening. And it gives you this view that you never had before. It's like being up on a tower and you can see what's going on around you and you get it instead of being like just following signals around. Silliness. So here we go. We're pushing up and it looks to me like, we got another little sweep here. We got a little move here. Does that mean much to you? It doesn't mean much to me. And these price sweeps don't look to me like capital injection or whatever, because they're not associated strictly with anything in particular. They're just here. So I don't take them to say that that means that capital got injected in the market. You need to keep that in mind. Only take sweeps in directions after liquidity. Decay, I like them because it's favorable. But even with decay, I'm a little looser on what I'll consider, because decay is not consuming liquidity market-wide. Decay is it's like a smaller scale trade it's just not as intense. So these sweeps up don't mean a whole lot to me. I want to make that clear. These I don't take as validating points. Oh, it's sweeped up. That means that it's headed through the roof. I just see those as things moving around. I don't see liquidity around them that would mean anything. What I'm looking for now is this here. See, we're getting a little closer. And you can see that sampling the bears likely means a little sideways to up action, maybe a little up. But you can also see that these guys right here are going to start to feel that pressure. And it's almost like, bears, are you guys going to dollar cost average a loser again? Really? Are you going to do that again? So I think the bears would start to feel a lot of extra pressure, because this is a story they've already been through. Getting into a position that sort of works, they're able to accomplish a little bit, comes back on them. And then these guys, I think they would probably liquidate through, most likely be about 307 through the high, 3070 up here-ish. Why do I think that? It's because, institutions don't just unwind. It takes them a little while to unwind anyway. So I think that they would likely liquidate up there a little bit through the high if they're going to get liquidated. In order to do that, I think the market's going to have to move up and sample the bears again. Is it going to do that? I don't know. Bears can push again. Absolutely. Remember, there's no reason why they couldn't. They can shove this down, try and get things to move in their favor again. You can see that they slowed down right here. You can see it. That's the possibility space cooling off. As they get done with their little first leg, it moves back up. Look at this. So here's where we go. See the sweep down? The bears are not, I think this is insanity by the bears, albeit for me to make judgment. I'm going to wait to see how this plays out before I think that there's a clear-cut direction, before I want to do anything. I still think this is difficult to see. So if you're holding a position from yesterday, this will be a lot easier to cope with than if you're trying to get into one today. Nonetheless, the bears, they're doing the crazy. They're going for it. And this is the thing that I hate about the bears. And they do this all the time. It's like, let's try as hard as we can to do something. But the one thing that is different here is that the bears have a little bit more propriety. They were able to see the bulls not act. So how far down is their target? Their target, they're looking to get probably back down 30.46. We're already there. We're looking for a sweep, and you can't see it here because the chart and the actual ticker, for whatever reason, Thinkorswim can't just, anyway, so they're delayed, but you can see there was a sweep there. So I think definitely you can interpret this as the bulls were liquidated, and that is some trouble. This is going to change our narrative. If the bulls were able to get liquidated on this down sweep, the bulls are going to have to start to step aside and be a little bit more concerned. The bears will get emboldened. But our first place here, 30.46. So you can see the market sort of got down there, is like hanging out. They were able to push this down, hit the stops here, liquidate that position here. Done deal. That was what they wanted. Now, can they impact tension from here into the close? So you see how frustrating that could be if you're trying to just grab everything. Like I said, those bears weren't done. That was their scope. They got it down there. Can they keep going? Can we get tension down lower? From this point forward, everything the bears put into the market is going to be risky business. If they push this down further than 30.46 or 30.45, right in that little spot there, everything they jam in there is going to be risky, because now they're trying to not just topple over a loser or somebody that trapped in, right? They had trapped in these bulls. and they were able to liquidate them. I think that's pretty clear. Prices move pretty aggressive. Look at how these charts, all of a sudden things get exciting and Thinkorswim's like, I can't keep up. So we could see they're getting down there 30, 44. So everything down here in these levels is risk for them, because if the bears push this further, they're going to start running into bullishness. And bullishness is where that the bulls don't need liquidity. They just turn you over. It just, that's what's going to happen. Anything below these levels, because we got the backside of, right, the up, this was a sell position. That's why I marked it. So anything down here adds a mouth to feed. I was going to draw a mouth, and then I was like, I don't know how to draw a mouth. So they're adding people to pay. So that gets a little bit of resistance because you need to find more people to pay. Also, the bulls are not in control of the market. So there's going to be this propensity for the bulls to just come in. But the bears would like to bring this down as far as they can. The bulls would be okay with that. Just remember that everything down below this little area here, so where we're at now, is risky for them. The capital injections, putting money in the market, is now exposed to getting folded over and taken from you. So if they do it, they better go big, or they're going to go home poor. So that's how I interpret this, because of the conditions that we have, because of the place that we're at, because they were able to liquidate some of the bulls, because they were able to take out the decay retest, because they were able to get under there, because the bulls were able to do a little social justice and wipe out the major bearish players yesterday. Anything down below this area is heavy risk for the bears, and pushing down here is tough to sustain. It's gonna be hard. Just don't think they're quite ready to say we have control of the market. But they could push things down. I mean, that's what they did. They just flexed. That we just saw that. I need to go to the gym. They raw, and it said it's risky. Getting it down to that level was okay. Getting it under it is just sheer terror, because the bulls have not lost control. They just sort of stepped aside here. Okay, so you seeing that? Are you seeing how this works? I think at this point, the bears will have, can they get it down to here? I really don't like that. In fact, I think that this is a better opportunity to buy in here than it was when we had a signal. And especially after that stress test, this looks a little bit better, but we still don't have an established bullish position that you can really get a gauge off. You have to just keep in mind that you're trying to trade the fact that the bears will fail to take this down to the lows today because of the whole context of the market. That's what you're trading. If you're selling here, you're trying to take advantage of the idea that the bears will continue and that they're willing to take on more risk. But I think you're wrong. If you're selling here about 30, 45, 30, 47, I don't think the bears are quite willing to take on extra risk. I think they're willing to flex because they have this room to run down to that decay retest. But I don't think they feel like that they can just burden a bunch of risk and shove this down. I'm sorry. I don't buy it. I think that they were emboldened to bring it down to that spot. And that's that. At this point, moving into tomorrow, if we can get decay to tension maybe down here to, it looks like we're probably going to be hitting about 10%. Look at that, we're at negative 13. We probably close about 10%, maybe 11%. That means that the bears still have significant work to do if they want to have a chance to compete in the market. And the bulls probably are just, I don't think they're going to step aside. I think what's going to happen overnight is that the bears did their work. They liquidated the position. They created some real sharp teeth here. This would have been part of it, this little thing here and this here. This is all just teeth out of that main liquidity position. It's tough. It's difficult. It's supposed to be. I don't think they're going to be able to hold this down. Will they? I need to think about this for a minute. Give me a minute. I don't believe in the bears. I don't think that the bears are going to win this right here. I think it was a good flex. I think the elastic market is the elasticity driving tension towards zero is going to probably continue because I think it's advantageous at this point for both sides to have that happen. I think the bears are active and I think they're here. The problem that I'm having, the reason I'm having like this emotional turmoil is I don't think that the bulls I don't know if I trust the bulls right now. Like it's like I don't think the bears are going to win so much, but I'm concerned that the bulls aren't going to do anything. And it bothers me. And the reason that bothers me is because of that concept that I'm always throwing out, that you guys hear me say, symbology. You see a sweep down like this. We've seen a sweep like this before. We saw a sweep on Tuesday. The bears flexed, folded them over. But we didn't have any bullish like submission. They didn't give up, walk away. So it was like, okay. And then we saw it again on Wednesday. The bears flexed, folded them over. But today we have the bulls struggle. The bears flexing. And I'm concerned that I'm seeing symbology. I'm seeing the symbol. The symbol is that the bears flex and fail. And we just saw the bears flex. And I'm concerned that they won't fail because the bulls have shown they're not. They came in, they tried to hit, they possibly had a chance there. The bears flexed it at a really great time, and I'm reflexing in memory, or like it's like rhyming with the previous 2 days, where every time the bears tried, they failed. And I'm concerned that I'm responding to symbology. It's like I'm seeing a symbol and making these assumptions out of it. And I don't like it. I still think this is risky for the bears to do, to push things down the way they're doing right now. I think we have a problem. Could get a decay retest there. It's an old one. The problem is the symbology. I'm having an issue with that. I'm sitting here thinking, I've got this precedent in my head that bears flex and fail. And today we saw the bulls have a hard time, or we saw them hit and fail to impact tension, and then they flexed. And I'm concerned that I was biased and said, oh, this flexing is going to fail. It got right to that level that we were looking at, and I was moving down through it. I'm really concerned that I was wrong. I was wrong to say that I think that the bears flexing at this point could fail when we see there's elasticity in the market. I'm really worried that I saw a symbol and got carried away, echoing that against the previous days where this condition is very different. We have seen some failure by the bulls. and success by the bears. And that bothers me. I don't think we're headed back up into the close because of symbology. That's what I'm going with right now. I think that that got to me more than it should have. And I think that more than anything, we're going to see a group of people who are thinking like I was thinking and not able to grapple with the fact that they saw something and believed it would go back up. I don't think that the bears are in control of the market looking at tension, but the elasticity, yeah. Looking at this here, elasticity means down to 0. So that's their objective. I didn't think they were going to get down that far. We hit that level. My response was, I think it's over once we saw that flex, but I'm concerned that because of symbology, because it's echoing in the traders' minds, that too many people are going to buy into this thinking it's heading back up because the bears failed and it's wrong. And I disagree now. I think that flex down was different this time in that it was modeling something subconscious. And this is the part where the market can devastate you. I don't think we're headed back up into the close. And I think it's because I misinterpreted something and became biased because of that echo from the past, because we constantly have seen the bears flex and fail. But this context allows that they could flex and do better. So we got down to 30, 35. So we got down to that lower position that was simultaneously the opening area and potentially a bullish position that I wasn't here to actually see. "25 minutes. Will the bulls defend the open?" If they had a position there, then yes. And this is, now it's getting like more complicated because I'm not quite certain if they had that, because the intraday movement is a little tougher to see. Oh, we could use that actually. What? It's like, is this my first day? So now it matters. You could see that velocity was over and this was off the open. You see it crossed over right there. And then we have the trapped orders right there. So, okay. So yeah, there's bulls there, and I don't need decay now to model that. So there's a bullish position there. Okay, so that got down to the bullish position. Will the bulls defend their origin position for today, or the open area? If they don't, it's headed here. 30-20, I'd say about there. Will they? I don't know what you guys think. Anybody have opinions? Discord, YouTube, anyone? I think this is a tough situation. I think as soon as that market came down, I saw that, I echoed it, and then I became biased. And so this next leg down, I think, is a fact that so many traders who are paying attention, have been participating in this, have this knee-jerk response to say it's going to go up. And this makes me really worried that we are not headed back up. I don't like symbology when I get pulled into it. I like to see it coming and stuff like that and stuff. You know, I think I reacted pretty quickly. I had a few minutes in there where I needed to take a break. Almost like my bias sensors were going off or something. And I think that's what's happening here. As we get down to this spot, I'm feeling a little bit of second guessing going on, and I don't like that. So I'm asking the community to speak up. If you guys are out there listening, I don't know how many people are listening. What you think is going on here? Maybe give me a minute to reground myself. We only have like 20 minutes, so you get a little bias and it can pull the rug out from under you. And I think that rug 0, or will the bulls step up here and defend it? The issue I'm having is there's not really any liquidity for the bulls to pick up. Decay is down, velocity is down. We're starting to see portfolio orders even fill right about here. I'm having a hard time seeing the bulls give up their origin position for elasticity. We don't usually see a lot of, you don't usually see that at the end of the day, where the bulls from earlier will give up their footing from beginning of the day. Usually if you get elasticity in the first hour or so, there's a little more freedom there. It's true. So I'm having a hard time seeing them give that up, but I'm also second guessing myself because for like a few minutes there, I think I gave in to some biasness, and that really drives me nuts. I'm still having a hard time trusting these bears. What they want. They want. Oh, I had someone at my door. Actually, I know exactly what that is. Give me just a minute. I'll be right back, and I'll think about this. Okay, I'm back. So I've seen a little bit of support from traders here. Except for Diddy Kong. I think he's short. So we have, oh, just a second. Never mind. It's just a child running up to me and running away. Okay, so see a little bit of support here. It's people looking at the long side, couple on the short side. I have Mike on the YouTube chat says that he thinks there's gonna be an uneasy Friday bull. So I sort of stepped away. Somebody dropped off we got a freeze dryer today, so I'm a little excited about that. But considering what I think is coming up, what I see in the near future in terms of events that could happen that may actually inspire me to do some act. I'm looking at this right here. Getting a zero test out of the 30-minute, I think, would be the next event for me to think that there's going to be opportunities for the bulls. And that means that I don't see an upside into the close because we won't be getting this 30-minute sample, the 30-minute tension. We're down to 8% here. I think that symbology really took out a lot of people who tried to pick up on that idea that the bears flexing has constantly failed. And I think I was a little too heavy on that. It's just been something that's just been going on. And so if the bears are trying to get this 30-minute down to zero, that's, I think, the next thing that's going to happen. So the thing I'm going to be watching for into tomorrow is going to be a 30-minute test of zero. Unless something overnight changes, I don't think we're going to see a big change in the attitude of the market. Remember that portfolio filling doesn't mean, so if you were watching this because I pointed out, doesn't mean that the market's going to do like bounce. It just means that when things look like they're headed down, buying makes sense and they'll buy all the way down. I consider these people to have unlimited account balances and there is no bottom for the portfolio filling indicator. So I think the filling in this instance indicates to me, they're seeing maybe a pivotal moment here, things coming down. But I'm having a hard time seeing this doing much else. I think that the zero test is what's on the minds. We got an elasticity from the nod today right here. I didn't think that the bears could accomplish it into the close, and that gave me a different, but oh, here we're heading down. So I think I was looking at that way, but I think what's happened is there's a symbology. And if you're not familiar with the symbology concept, it tends to be associated with much bigger moves in the market because they can get into your head and mess with even the most active traders. You think you see something, but really you're responding to something that rhymes with something you saw earlier. I think that is really the catalyst here. I don't think we're headed up. I think 30-minute zero test is where we're headed. Should have been a little bit more on top of that. And I apologize. I think I got a little stuck on that elastic concept. Sorry, the idea that the bears flexing would fail. We've seen it a couple times and it got to me. That's what's next. This zero test is the next thing I'm going to be watching. If we could get that tomorrow, that'd be good. I think that the bulls will start to have some issue if prices get down to their main positions from yesterday, which will be right. Let me move my face. This right here. I think this is their main position. And then there was another one. I think these are the two positions the market really cares about. And on the ES, that's going to be right about here. So 2990 is going to be the spot where that I think the market's the bulls will have a much bigger problem with elasticity if those are the prices we start to see. So if overnight you see those numbers, I would anticipate that the bulls are going to have issues with that and they're going to buy into it at least until the open to see what happens and where the numbers are and how people are playing. Currently, I'm waiting for that 30-minute test. This came down. I think a lot of the speed generated by this was simply the symbology. I don't think they should have gotten it down here. If that hadn't gotten to me, I don't think I would have. I would be going. I'm just looking for the 30-minute test now. I think that it acted in a way that echoed what we've seen before so well that I think that's what's happening here. And I don't bring this up to say, hopefully you don't say, oh, you're just saying that to justify it. We see this type of thing where that you have the market echo. It's sort of a fractal concept where you see the market echo something it did previously, and it gets people on the wrong side, and it usually has to do with larger moves in the market. I think it's a difficult thing to pull off. So that's my stance on this close. I think how this is looking right now into the close. I think that the bears have an elastic mentality. Remember that. They're not in control. They were given a nod, and they were able to take this further than I thought it would go. The next event is 30-minute tension hitting 0. And at that moment, the bulls will have a serious question to answer, is if they're going to let this work or not. And there's a really good chance that we see prices respond there. That's going to be the target that I'm looking at, is that. So that's, oh, we got down to this spot here, which is that second, which is where the bears had their position, the last position I think that I saw yesterday. I'm just a little bummed because I didn't see this coming. I think is a little clear. I should have been paying attention to that. I think I should have seen that. It's a familiar concept that we see probably once every other week, I would say. It's one that we see often enough. Anyway, that's where we're at. I think going into this close, your mentality, you should think, okay, 30-minute test, that's the thing to watch for tomorrow. We're going to see some activity around that tomorrow, probably around the open. Some notes about that to keep in mind. If we open and we see the daily like this, and 30-minute dip under, we can see this would be an MTFR, which is multi-time frame resistance. MTFR is where we've seen this before. We have positive longer term and negative shorter term, which creates counter resistance. At the point when you see this go under, you'll see this thing turn gray, and then it'll go like negative. Usually it'll say negative 0% because the decimals are negative. And at that moment, you want to look for trapped orders and stuff like that. And that's the point where you're going to be looking and saying, okay, here we go. We have the 0 test. We're getting the retailers come in. Now the institutions can buy against them at the 0 test. So it'll work a lot like liquidity, but it's a little bit more high level. And the response is usually a little bit better. If daily tension, here's the big thing you really have to watch out for. Okay, this is the big risk for the bulls. Tomorrow, and tomorrow, if the daily gets under and the 30 gets under at the same time, this will be a trend cap. If they both cross under, trend cap is the end of the control by one side. And before they can reestablish themselves, or before they can regain control of the market, they need to reestablish control of both of those and liquidity and wipe out the counterparty. So they would have to, it essentially ends the reign of the winning party. So that would be the risk for the bulls here. If they lose control of both of those at the same time, and then that would trend cap the market, and the bulls would essentially say, well, we lost control here. So the scope here is this. That's how far this can move. That's how far this rally can go, is this far. That's what we got left. If we could actually see prices gap up and tension gap down. I mean, that's not impossible. Like, it's just tension and price have a relationship, and we could see that. We could see this right off the open. It could be at 0 and pops out of it. We could see both turn right at the open. I mean, this is going to be a really intense open tomorrow. I think today things were pretty clear until just after that flex, and then I needed a moment. It's frustrating for me. I'm still a little frustrated about it. And I think that I am a really good sample for how likely big institutional traders are feeling. If you're using me for that, it's a good move. I think I represent the institutional mentality pretty well for bulls, better than bears. I've never been a big fan of the bears. So I feel frustrated. This sort of has irritated me and frustrated me. So I think that's how the bears are feeling about this. I'm not entirely certain that the bears are feeling like, or the bulls are feeling like they've lost. I think it's just frustrating. That's the event we're going to tomorrow. You need to keep your eyes on tension. This is going to be the big event. I think basically what happened was we were able to take out the bears. They got reinvigorated. It was just slow, and then they hit, and they got tension down further than I thought they would get it, further than I personally thought they would get it. And we're getting to close. You see that about -5% is probably we're going to be at about the close. So we're right on the teeter point here. If we see a huge shove overnight, another one, not this, more. This did not get bears control. This got bears much closer than I thought they would get. It didn't gain them control. If another shove overnight caused this to gap way down, and by way down, I mean like 40 points, we could see everything underwater tomorrow. Otherwise, there's a really good chance tomorrow the bulls pick up a tension test, but it is not ad hoc. You're not going, this is by default. You need to look at the conditions as we're going. Look for bulls and bears, see how they're playing together as that happens. If it just happens off the open, I think the default, if that's the first signal you get, is to assume the bulls will show up. And then we need to look to see if they continue to pick up liquidity, and then we need to look to see if bears continue to fail. You have to see these events validating that stream of reality. Otherwise, you could get stuck in a trade that folds you over. If it opens up and we have a little bit of room, look for bulls, look for bears, and then look at how they're playing. And then that can help color how you should expect tension as it gets to zero. The next event here is tension getting to zero. At that point, the bulls will need to turn tension back up using trapping in the bears or something like that. So that's where we're at right now. I think the last 2 minutes here will probably close sideways. I think they got this a little bit further than I would have liked. They got it all the way down to here. It's just that this was the symbology concept that, and if you're unfamiliar with this, don't worry. We'll probably get more opportunities to take a look at it in the future. And I'll go over it as it happens. I'm a little frustrated that it got a little bit more of me than I thought. I haven't personally seen anything in here that I would like to act on. I think that today was not a day where I saw any AAA setups that I was like, ooh, this is a really great spot to trade. I haven't done anything. I think that tomorrow may have something where I might actually want to participate in it in a good way, potentially. It really depends on how things play out, but we'll see. So I've been trying to do afternoons. I think that tomorrow morning probably make a little bit more sense for the first couple hours to walk through markets, because the data points I think there's gonna be a lot of them. It's gonna be intense, so I'll do that. Let's take a look. Jim's cursing, so I need to look. Okay, so he's saying he thinks people shorted into the Trump news. That's going to end up being a whole lot of nothing tomorrow. Now, I actually heard that Trump was getting Twitter is getting gutsy and starting to tell Trump no, saying you need to check your facts, Trump. It's a little funny, but it's also a little irritating. I mean, Trump's our loose cannon. Everybody, if you love Trump, you love that he's a loose cannon. If you hate Trump, you hate that he's a loose cannon. The things that people like about him are simultaneously, I think, the things that people hate about him. He's an economist, not a politician. And so if YouTube is trying to censor him or at least provide mainstream data points about whatever he has to say, I have a hard time thinking they're going to get him to comply. I mean, he doesn't even want to wear a mask. So I get a kick out of it. I love to watch the drama that's going to ensue because drama will ensue. So I think this was a little frustrating for me. I hope that you guys were able to get something out of this analysis to see how I walk through these problems. We've got a good model here. I think there's going to be some really good market activity going overnight and into tomorrow through Friday into the close of the weekend. I think we're going to have some good stuff happen. I think you want to stay tuned for that. Come back tomorrow morning. I'm going to get up. I'll be here at the open. I like to sort of wait until we've got enough data points where I can sort of weave the picture. But I think tomorrow's going to have some good data points. We'll just do that. I'll get up and be on here a little bit before. If you guys have questions, shoot me questions. If you have questions about indicators or anything, like, you can get a hold of me here, Twitter, YouTube while I'm streaming. I'm Probably not going to read these after I'm done. I hope this was useful. Markets closed, 30-minute test tomorrow. That's what we're looking for. All right. Good luck trading, guys.